today's webinar is all going to be about how do you trade like a professional with a blueprint in mind. Now, so let me first ask you this, right? Have you ever felt like trading is just one big gamble, right? One day you're up, the next day you're down, and then you start tweaking your entries a little bit, you start adjusting your stop losses a little bit, and then you see wins coming in, and then all of a sudden losers starts to come in. You go onto YouTube, right? You go onto YouTube and then you see some specific strategy or specific technique that some YouTubers are talking about, start implementing them into your strategy. It works, right? It works. And then again, all of a sudden, your trade starts to lose, and then you will repeat the cycle over and over again until it all just feels like you're not going anywhere. This right there is exactly what I've been struggling with for years, right? Show of hands, who has felt the same way when it comes to having the right education for trading, right? So most traders think that it's a strategy problem, but for the most part, it's not a strategy problem. It's a problem that really boils down to having structure, consistency, and basically they're missing the blueprint, right? What are you trying to do in the market? And is that thing that you're trying to do repeatable? If it's repeatable in the long-term process, you're gonna make money. And most traders fail to reach the long-term part because every losers come in the way, it's gonna start creating doubt, right? So having a strict, solid process is very, very important, right? So today I'm gonna show you exactly that, the roadmap, right? The exact blueprint to trade like a professional, okay? You're going to see the framework I personally use to create consistency and avoid any emotional decision making, and then trade with the same type of proficiency and consistency as how a profitable trader would trade. Some of these techniques are derived from the Pip to Profit program. Of course, I'm not gonna have time to go through the entire program in this one webinar, but we're gonna do our best, right? I'm gonna show you bits and pieces of what's taught in the program to give you a better idea of, number one, how do you actually have a blueprint for trading professionally? Number two, getting an idea of what's in the Pip to Profit program. Of course, if you guys later on have any questions, just drop them in the chat. I'll be happy to help. Okay, now this right here, Aussie USD, is a trade that I was personally looking at with the rest of the guys in the trading community earlier, and this right here was one of the easiest and most straightforward trade that has happened today, right? These kind of trades, they happen every day. But before we go into the specific strategy, all of that, I want to first talk about the main things we want to cover when it comes to trading like a professional, trading with a strong blueprint. Now let's cover this up. Okay, there's so many strategies out there, and I just want to make sure that everyone understands that if you want to trade professionally, if you want to trade and become a profitable trader, it does not mean that you need to have a shit ton of indicators on your charts, because it doesn't make sense, right? What about the traders that used to be trading on the trading floor back in the 80s or the 90s, where computer is not even a thing? What about them then? They have no indicators at all, and what do they actually use in the market? Can you guys answer that in the comment section? The only thing they're using is price action, right? And this strategy that I'm going to show you is exactly just that, right? It's just focusing on pure price action. That's it. And when I talk about price action, I'm not talking about candlesticks, not talking about doji, head and shoulder, not that kind of BS on the market, on YouTube. I'm talking about price action in a way where in the market, things are only going to do market is going to do a few things. It's just going to either going to go sideways, right? It's going to be in an uptrend or a channel, right? Or in a downtrend or a channel, right? Mainly, it's just going to do one or few things. Either this state, or, if you want to be a little bit more nitty gritty, it would be, in a channeling form. Okay, channeling form like that. Your job, my job, everyone's job here is to get in and then see price moving, right? That's all we're trying to do. That's how we make money as traders. Doesn't matter if it moves down or up, but we want to see price moving. Out of all of these three market states, A, B, and C, which one has a higher probability of moving far, fast, and quick? Let's say A, B, and C. Okay, we have the channel, the range, and the trend. Which one has the highest probability of moving far and fast? Answer that in the comment section. Obviously, it's gonna be B, right? Now, A is a range, and by definition, it's just gonna go sideways. It's not gonna go anywhere. Then that leaves us with C and B, where there is a direction involved. It's going up or down, right? And if we only had to choose one, it's gonna be B. Obviously, it's as simple as that. So you can see right now, I'm trying to just use the most basic knowledge out there on YouTube or on your trading one-on-one book. I'm using all the basic knowledge out there and applying logic to sort of show you, all right, how can we build a strong, profitable trading strategy, right? So if my goal is to trade and if I want to make sure that things move, okay, this is already out of the window. When I see a range, I'm not going to trade that because I'm not sure how far or how fast things are going to go. Now, I know this too, things are going to go far, but which one is going to go fast? Because when we think about fast, that's what's going to affect our psychology, right? You want to be in a trade and the trade goes into profit fast. That's very, very important. Because if it goes sideways for too long, you're going to start doubting yourself. You're going to start managing the trade and then, you're going to start fucking yourself over by moving your stop loss too quickly, moving your stop losses too tight, all that kind of stuff. And that tends to happen a lot in the channel market, right? So then that leaves us with just B, okay? Now, B has what characteristic? It has power. Power, okay? It has power and strength. So all, market state A and market state C, they do not have power and strength, but we know B has power. Okay, so based on that, we're still building the foundation of what we need to see in the markets. All right, so based on that alone, power. What else do we usually see in the markets where power would sort of present itself? Power will present itself when there is a range breakout, right? We see this all the time, right? It could be a range breakout to the upside or the downside, right? Or we can have a trending breakout. Trending break to the upside or trending break to the downside. Both of these, B and let's call this D. This is not a market state, right? But this has logic to it. What logic? It has power. That's all we're trying to look for in the market. We're trying to look for power to exist so that we can join the power where the trade that we're going to be taking is going to move fast and quick. Okay, so that leaves us with just two types of market structure that we usually want to focus on, right? So if I clear this out, your first step is going to be looking for power in the market. Doesn't matter how it looked like, or it doesn't matter, it doesn't matter how it looked like, but your whole goal is look for the power. And I'm going to show you on the charts in just a second, right? So don't worry if I'm not going to show you any live example. I have shit tons of live example to show. The first thing is power, okay? Second thing is you want to be able to join the power. All right, identifying power is not difficult. Right, you show your charts to the niece. Your niece is gonna point out where is most likely the Asia dead hours and where is most likely NFP. Your 8-year-old niece would be able to tell you that. The problem, well, not really a problem. Where it gets difficult is how do you join the power? Because this would happen. Boom, traders would get in. You see a pullback, that would get in. Things start to go, that would add, and then get in, right? There's power. Let's go. This is, how things have been for, any types of market when things are flying. You see your neighbors, your friends trying to get onto gold right now because Robert Kiyosaki has been talking about gold, and gold has been flying right now, and everyone's getting onto gold. And then, things will start to pull back, right? So joining the power is a problem. It has been a problem, and it will always be a problem, because that has to do with human psychology, and basically we can't erase human psychology from human, right? Then what does that leave us with? Right? So anyway, joining the power is where the problem is, and that's where we will be focusing on our webinar on for today, right? For me, for how I've been taught, when we want to join power, we need to make sure there is, number one, a pullback coming in. Okay, so sort of like step 2.1, right? 2.1 is we need to see the pullback coming in, and then step 2.2, right here, 2.2 is being able to spot the reversal. Spotting the reversal comes with a few things. The technique that I use the most, and I talk a lot about this in the Pip to Profit program, is a technique where we really want to trap traders on the wrong side to leverage on that for a release to move up. Okay, that's a lot of strong words in a very short span of time, but I'm going to again show you that on the charts later on, right? So identifying the power, joining the power, and that's pretty much it. And then it's all about rinse and repeat. Of course, right? Of course, you will have times where you're suffering from losing trades, you're suffering from losing streaks. That's gonna come time to time, and sometimes it can last for days and weeks, sometimes even months. But if you have a profitable structural strategy that you can follow, and you have proof that long term is gonna make money, those losing streaks are not gonna phase you. Let me put it that way, right? Because you have a structure, you have a strategy to follow. Think about yourself like a pilot, right? You see pilots flying for thousands and thousands of hours, before even getting the license to operate a whole fucking plane, right? But even after that, every time they go into the cockpit, they will still take out the checklist, and they will still, make sure that every toggle is, toggle on or off properly, making sure that everything is follow with the checklist, and nothing is missed, right? Even after thousands of hours of practice, they still do that. But when it comes to trading, we all become a little bit cuckoo, right? When it comes to trading, right? We just do whatever we want in the market just because we can. And that's where things tend to fuck up a lot. But yeah, let me show you on the charts exactly what I'm talking about. How do you identify power, and most importantly, how to join the power with a very, very clear step-by-step process, which is repeatable, right? All of this, again, it's bits and pieces from the Pip to Profit program. Yeah, let me know if that makes sense, and we will jump back onto the charts. I'm gonna first show you Kiwi Swiss. When I pull out Kiwi Swiss, half of the chat might just leave, because who the fuck trades Kiwi Swiss, right? But yeah, I do look at all the forex currency pairs, all 28 of them, and I'm gonna start with this one right here, which happens just very recently, Thursday, 23rd of October last week. Now, this right here is not a trend, right? Remember when we were talking about how there's market state A, and then there is the other one where it's a range and a breakout. This is one of them right here, right? It's not really in a trend, but what we do see here is a range right here and a break towards the upper side, okay? That itself is power, right? That itself is power, because it's showing you that this price, before it was pulling back and there were sellers hitting it. Before there was pulling back, sellers were hitting it. Before there was a pullback, sellers were hitting it. Every time price pulls back, people are hitting the sell, which makes this price super, super important, right? And when that price got breached to the upper side, it takes a lot of power and a lot of money to be able to push price higher and hold above it. And because there's power like that exists in this area, it tells you that there is gonna be a spillover effect, where if there is a pullback, things are gonna at least try to make another run to the recent high. Okay, so that's what you're betting on. We can never guarantee that things are always gonna, breach, pullback, does that. No, that's not something we can guarantee on 100%. But what we can guarantee on is this is an important level. If price pulls back, there is something we can do. Whether this trade makes money or not, that's not what we're here to figure out. Our job here is to figure out, is there a process where we can follow where if we keep doing the same fucking thing, it's gonna make money in the long term. That's our job. Okay. So we have identified the power, right? We have identified the power. In the very short term, we know things might make another run towards the upper side. Okay. So once you have done that, the second thing you want to do, remember how we were talking about joining the power, is you look for a pullback back into a level. This level specifically, it has to be back into a level, because that's where, think of it like it's a magnet, right? And when price comes down here, it's going to absorb price down. And then as price reaches there, it's going to propel price towards the opposite direction. So think of it like a magnet pulling and repelling all the time when it comes to strong levels like this. So wait for price to come back down. And then once price reaches that area, what you want to do is apply the 2 time frame technique that I've been rambling about over and over again for the longest time. Okay, so once price has come back down there, jump onto the 15-minute time frame. Your job on the 15-minute time frame is, there is a couple of steps here, okay, but it's very, very simple. Number one, step one, making sure you're able to read the swings, higher highs, in this case, lower lows and lower highs. So we are able to see pullback, the next lower high, lower low, no more, same high here, and then boom, lower low, okay? Like that, right? So when you're seeing things coming down in downtrend, it makes things easier for you to really identify what are the sellers doing here, because downtrend means there are sellers, right? So what your job is to make sure that the sellers get trapped, and then we take the opposite side. So here's what's going to happen. We see price coming down like this, okay? On the next pullback into that area, what's going to happen? If we do not know that there is a big level on the left, if we do not know that it's coming from a move towards the upside, if we do not know all of that, purely just speaking about downtrend, what's going to happen on a pullback? Okay, this doesn't look like a pretty downtrend, but in the downtrend on a pullback, let me know in the comment section what is going to happen. Okay, I see some of you guys are saying the correct thing here. Yes, on a pullback, things are going to look for, well, the market is going to look for another sell, right? So focus on that thought process. In this area, people are going to be selling, okay? It could be retail traders, it could be institutional traders, but in this area, because there is also a strong level like this, people are selling. People are going to sell right there. And what happens if someone sold and things just turn around like that? Anyone who is selling here, think about their orders. It could be big players, small players, whatever it could be. When people sold right here, they sold once, twice, let's put this. They sold once, twice, and when they're going to draw down, right here, the best call to action for them is to at least minimize their losses, right? Minimize their losses. And how do you minimize your losses? You wait for price to pull back into the same location, which is right here, pulling back into the same location. And then for anyone who was selling before, these guys here and these guys right there, just simply hit the buys. When you hit the buys, you release off your selling position, and that area right there, if enough people are hitting the buys, price is gonna fly. At the very, very minimum, this area is going to give you some sort of reaction just because traders are trapped, because they thought that this is a downtrend. So what you're essentially doing on the lower time frame, the 15-minute time frame, is you're trying to look for traders who are trapped, but location matters. You want to see them being trapped after reacting off a strong breach area. Okay, because this adds fuel. This right here adds feel to the market because this comes from a higher time frame. Remember, this is another level that is in the market. So we have level A right there, and then we have level B right here. Level A is the smaller time frame, where it's telling you that level has a high probability of holding. Level B right here is telling you we are responding off a huge ass level. Things are, or things might, going to react, right? So you're putting things into perspective here, and you're adding things into your strategy to tell you that the buy I'm going to take here, it has power, it has to move quick. Now, remember this technique that I was telling you about? This right here being trapped and then releasing on the wrong side. This right here, if we go back to the 60-minute, we see the same thing. We see the exact same thing here, because this right here on the higher time frame is a full-blown downtrend. Everyone is selling. And when they're selling, on a pullback into this area, look at anyone who was selling before here. These are people who were selling. Selling. Right here again, selling. Right? Every time they sold, price went down, down, down. Right? And then when this breach happened, they are trapped on the wrong side temporarily. I'm not saying that this is going to reverse for 1,000 pips to the upper side. No, I'm just saying that because people are trapped here, there is going to be a reaction there, for sure. So we just make sure that this level has some kind of logic to it, and things are going to react. There is going to be a push towards the upside. That's good enough for the higher time frame. Then simply, when you go down to the lower time frame, your job here is to simply find the same type of market structure, the same type of logic, apply it to the lower time frame, and then look for a short-term reversal. Now, the short-term reversal can give you very huge risk to reward from time to time. But right here for this particular trade, how this trade would set up will look something like this. You would simply wait for people to be trapped, and on a pullback into that area, look for a buy there. Your stop loss can go below this range, this particular range. Why there? Question. Anytime someone teaches you something, always question. Why there? The reason why we put our stop loss there is because our whole analysis is based on the fact that if price come back into this area, it's gonna fly. If it's not gonna fly, it's gonna come. If it's gonna come down all the way back down like that again, that tells you something is wrong. And if something is wrong, you don't want to be in the trade anyway. So for some of you, may have your stop loss all the way down here just to feel safer. You don't need to. The market is not a place to feel safe. It's not safe to be trading anyway, right? So you don't need to put your stop loss there, right? Your stop loss needs to be here, because if you have your stop loss there and the market goes all the way back down here, you don't want to be in the trade anyway, because this has a very high probability of failing anyway. So you might as well just tighten up your stop loss, make sure it's at a logical spot, and just go with the trade if the trade has a good risk to reward. Because I have been in the situations where I feel that, a tight stop loss just feels way too risky, right? But then when looking back, sometimes there's no need to have a tight stop loss, right? So for this trade, it will set up exactly like this. And if we play this forward, we would see a little bit of a drawdown, right? Not to panic here. Hold, and then going back into profit very, very quickly. This happened on Thursday, and this gave us a 2.08R return. Does that make sense so far, everyone? Okay, all right, so this right here is on Thursday, right? This right here is on Thursday. I have gathered 5 different trades from Thursday to Friday last week, to Monday this week, Tuesday and Wednesday. I'm going to show you 5 trades using the exact same technique on the same time frame, 1 hour 15, to show you exactly what you can actually do and what you can actually get out of the market by using, these techniques here. That's all from the Pip to Profit program. So on the very next day, we have the Aussie Swiss. Okay, Aussie Swiss has a very, very similar price action, similar story, sort of in a downtrend. We stalled for a very long time in the range. This created a trap when we see power towards the upside, right? There's power towards the upper side. Next thing you want to do is go down to the 15-minute. On the 15-minute, simply look for where the downtrend people are trapped, right? So if we really take out the annotation tool here, we see this downtrend coming down like this, Okay, down, down, and then boop, touch the level. This brings us back to a question where some of you guys were asking before, which is what happens if it pulls back too deep? Do you still trade it? If it pulls back too deep, I would not want to trade it, but I want to see price reclaiming that area, showing that that level is powerful. So let me show you what I mean. We have a pullback again. No one's really trapped, right? Because the swing high, the swing low here is still intact. We're still in lower low, lower high situation, right? And selling, selling, selling. If a trap happens like this, pullback, that's going to be a buy. You don't have that, right? So it's just a pullback sell situation. Pullback, downtrend, pullback, sell, sell, right? Another pullback, sell. Okay, so far we are selling into the level or into the zone, but we're not really going through it. As soon as price goes through it, I don't want to be in this trade anymore because number one, that tells me the power is not there anymore. Okay, because remember what we were anticipating, that if you have a breach and if you have a pullback, you're just sort of anticipating that there's going to be a power to resume the next move towards the upper side like that. Right? If it pulls back deeper and deeper and deeper, that just tells you that this, number one, tells you that this level is just not strong. And number two, that, you know, whatever power that came in from here is not there anymore. So if it's not there anymore, there's no point in, you know, continuing looking for a setup, right? So anyway, coming back to this this part right here, let me clear drawing again. We have people selling here, and right here. Okay, sell, 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 sell. And then suddenly a huge outside bar came in right here. This came with news. Some of you guys were asking that. If you see news supporting it, that's very, very good. That's a very good thing. Once that happens, and then do we see price reacting off this trap area here? Do we see a release? We sort of do see a release, right? We came back down and then we see a reaction back up like that. When you see that, that's enough confirmation for you to tell you that this trade would be for a buy. So you simply would go in like that, stop loss here, right? There's no real range here. So I'm going to put it at the recent low. Now, then the trade will go up to the recent high as so, right? So this would be a 1.66R profit, right? Here's the thing, this trade became a losing trade. I'm going to show you exactly how that will look like. We sort of went down deeper, and then this move right here, depending on the broker you're using, is going to piss the fuck out of you, because for some of you guys, or at least, for some of you guys, this move right here would have spread involved, because sometimes there is news. If your stop loss is not wide enough, if you put it just right here at the recent low, this move might stop you out. Okay, and then, but later on, this is what would piss a lot of people off, is we see the move going back to the upper side, and then on Monday, we have a gap right into the recent high, like that. On an educational basis, this would be a profitable trade. But if you're executing and you're, really executing in the real world, this probably would have been a losing trade. Okay, and it would piss the fuck out of you because it stopped you out and then goes right to profit. But this is the part where I want you guys to remember that all strategies have situations like this. We all go through the same thing. We all have situations where the market is just gonna fuck us over and then goes right into our profit target. Happens to the best of us. When you see stuff like that happening, do not change or do not doubt your strategy. Okay, stick to it, because in the long term, it's still gonna be profitable. So let me show you what happens on the next trade that happens on Monday. On Monday, we are gonna be looking at Euro Pound right here. All right, so Euro Pound has a breach towards the upside. Now, again, this is showing you clear power, right? We have a huge range that we break out of, had a pullback, and on the pullback, let's drop down to the 15-minute time frame, and let's see exactly what we are dealing with. So we have, what do we have here? We have push, downtrend, right? One move towards downside, pullback, And then on this push, we're not going any lower anymore, right? We have a move down, pull back, move down. And at this conjunction right here, pull back, sell, pull back, sell, pull back, sell, and then a boom, push towards the upper side. Number one, we are creating a higher low. Okay. Number two, we finally have some sort of structural break here. Number three, anyone who was selling right there, these two guys who were selling right there, when this move happened, they are trapped. Number four, all of this is happening at a higher time frame level. Put that together, you want to be in the trade. It doesn't matter if this trade is going to be a winning trade or a losing trade. When it comes to professional trading, you want to be extremely satisfied when your losing trade has no problem, right? What I mean by that is when you lose on the trade, you do not want to be able to find any excuses for why the trade became a loss. You want to make sure that even if you lose on a trade, you have followed everything to the T, follow exactly all the blueprint, all the manual to the T, and make sure that it's not your problem, it's the market, because the market is a probability game, right? You win some, you lose some. Most importantly is you win in the long run. Okay, so if we do get in on the buys, it will look something like this. And then, taking it up to the recent high. Play this forward. Coming back down for a test. And still hovering sideways, but see what market is doing. We're not going to draw down. And then boom, we have a move towards target, right? This is another trade with a 2.21R profit. Now, so far, hopefully everyone is following along, and that if you guys have any question, let me know, because this is one of the easiest trade out there that I've seen so far in the last 1 month. Now, fourth trade in installment. So far, we have one winning trade, right? One losing trade, and then we have another winning trade. I'm going to show you Bitcoin right here. Now, Bitcoin right here is a very interesting one because it again shows you the exact blueprint. Someone actually took that trade, which is good. Divine, you took that trade. Awesome, man. Good job. Now I'm going to show you a Bitcoin, right? This market right here, we have a couple of levels that we're looking at. This level here, this level here, this level here. So we have that level in mind. Also, we have a short-term uptrend in mind, right? So we definitely do have power. We also see strong momentum towards the upside, strong breach towards the upside, and we are seeing a pullback, right? A pullback into this huge ass level. Now, on the pullback, let's go down to the 15-minute, and we use the exact same technique, right? Downtrend coming in, and on the focusing just on the last part here into that level, right here, touching that level. Pull back, sell, pull back, sell, pull back, boom, people are trapped. Okay, as simple as that. As soon as you get a little red candle, you can simply get in on the buys. This right here has really high hopes because you're looking at a huge risk to reward all the way up to the recent high, a 3.09R profit. Okay, so if you take this trade, this is how you're gonna be trading it. Trading it on the buy like that. Okay, couple of retests. If in case you didn't get in, those are chances for you to get in. Stops will be below the range right here. Same thing as how I was doing it in the other trades. Boom. Okay, now we are close to target here, right? Once you see the market launches like that, right? The next thing you want to do is move your stop loss in. What I mean by that is your stop loss do not need to stay here anymore. Move it into, okay, I'm just going to use this line here. Let's change this to blue. Move it to this low here, right? Because that's the start of an uptrend, right? And that marks the higher low, right? In case we pull back, you want to make sure at least your uptrend, this short-term uptrend is holding. So your stop loss will be here, right? And let's see, on a pullback test into this area, it's gonna freak the hell out of everyone. Do not want you to move, right? Pullback test into that area, we push back up again. Once that happens, again, move your stop loss up because you're assuming that the test has happened into this area and it should reach profit very soon. So if we move further, try to go up, and then boom, right? Right at this spot here, you will be out of the trade. This is exactly how I would be managing this trade right here. Now, instead of a full 1 hour loss, this trade would profit you a 0.2 hour. This is gonna piss again a lot of people out, piss a lot of people off, because you could have got. This is what people usually say. Oh, I could have gotten out for 2.75 hour, but I'm greedy. There's no such thing in trading as being greedy if you have a solid plan. Let me repeat that one more time. In trading, there's no such thing as being greedy if you have a solid plan, right? If your plan dictates that you want to get out at the recent high and the trade just didn't get there, there's no such thing as, oh, I'm just being greedy. It's not about that. It's about, okay, is there a different way to manage a trade? If I see the market move to the recent high, close to the recent high, but it's not yet at the recent high, should I make a rule for myself to say that if it's XYZ% away from target, I want to get out? Should that be a rule? If there is no such rule in your trading plan, then if your plan just suggests that you want to get out the recent high, then you're not being greedy, right? You're just following your plan. I hear this all the time, and it really gets to my nerve. So random rant. But this trade right here, it's a winning trade, but the really small one is 0.2 R. Okay, so far there's four trades, 2 winning trades, 1 losing trade. 1 trade is more or less in break even. I'm gonna show you one final trade right here, the 5th trade, and this happened just very, very recently. This happened on Tuesday, pretty much last night. Okay, let's go back to the charts. So this trade, 60-minute time frame, again, downtrend. Now this is clear as day that we have power, because yes, we are in a downtrend, moving in a downtrend, right? And then as we move down here, we see a breach towards the recent low and clearing this lower low area. Okay, so let's go back to the 15. When I look at the 15 here, things are a little bit tricky. Why? Because I can't see the swings. When I see situations like that, I would just go down one time frame just to see if I can really read the swings here. Now I can read the swings. Now I can read the small little uptrend here. Okay. Now the small little uptrend shows that we're in a constant higher high and higher low sequence, right? Higher high, higher low, reaching this level here, and then we start seeing rejection. Do we get people trapped? Where are people buying? Right? People are buying here, 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 here. Then this happened. Boom. But look at the candlesticks. It's super small, super, super tiny. Why is that the case? Because this happened at 2 p.m. New York time, right? If you look at the time right here, is 2 p.m. New York time. That's where things really die out. When things really, die out, market really slows down. That's not a time where you want to be trading. So what you would want to do instead is just wait for the next session, right? So the next session comes along into Asia, right around here, and then market decides to breach one more time. It's at this area here, right here, where you will be looking for your next entry. So your entry will look very simple. Stop loss above this range, targeting the recent low, just like that. Okay, this will be a 1.4 hour trade, and it will look something like this. We pull back a little bit into that area. Okay, not here to talk about the exact precise entry, but I'm going to show you the overall structure of how you can just get in based on very clear instructional technique. Okay, so this is going to take forever if I stay on the 5 minute. So let's go up to the 15 and show you how this would look like. Boom, right here, right to target, 1.43 R. Okay, so 5 trades. You always want to, so this is another thing. When you're trying to be a professional, profitable trader, you always want to, gather stats and understand what's your process, what's your progress like. So I have a very, very simple Excel sheet plotted out, and I want to show you, if we put this on, this is how it would look like. Okay, very simple, right? Very, very simple. I'm just documenting 2 things. I'm documenting my winning percentage and my risk reward for every trade. So we had the first trade, New Zealand Swiss, right? It's a winning trade, let's just call it a 2R profit, right? So right here, For win and loss, if it's a win, then I would just put 1. That's just up to your personal preference. There's so many ways of doing your Excel. You can do it however you want, right? So for me, I'm just putting it 1 if it's a winner trade, -1 if it's a losing trade, and the risk to reward is 2. Okay. Now, second trade right here was Aussie Swiss. This happened on Friday. Right here, it's happened on Friday, and this we have to sort of say that this is a losing trade because even though price action did perform, but trading it would be very, very difficult. You would be having a stop out on this trade. So this right here would be a losing trade. It would be a -1, and risk to reward would be -1. Okay. Third trade, Euro Pound 2.2, winning trade 1, 2.2. Fourth trade, the Bitcoin trade. This is sort of a winning trade. 0.0. Let's just say 0.2. Okay, we will put this as 0, and we'll put this as 0.2. Bitcoin, Pound USD. All right, this one here, 1.43. It's a winning trade. Winning trade, 1.43. Okay, so looking at this, I'm going to put this as -1 since it's sort of like a break-even anyway. So I'm not going to consider that a winning trade. Otherwise, your win-loss ratio just looks crazy. So from 5 trades alone, and just 5 trades alone, just to let you guys know, 5 trades alone is not enough to gather or show proper statistic. You need at least 30 trades, at least at a very minimum, right? But I'm just showing you here from the last 5 days of trading, those 5 trades itself has this result, a win-loss ratio of 60%. And if we look at the average risk reward for every winning trade, you're looking at this one, this one, this one, and this one. So for the winning trade, you're looking at an average of 1.45 R risk to reward return. Okay. Now, knowing this data is very important because it tells you that if you do the same thing over and over again, what's going to happen. I'm going to show you how it will look like if we put it on a equity curve calculator. Sure, some of you guys may have seen this, but let's say if you haven't, this is very important just for you to get an understanding of the strategy you're working with and how you're trading, right? So if we put this here, right? What's the risk reward that we were talking about earlier? 60%. And average risk reward ratio of 1.45. Yeah, let's just say 1.45. Okay. 60% risk to reward, let's say 1.45. And let's say every risk per trade that you're taking in every single trade, let's just say 2% per trade, and let's say 100 trades. Okay. Now, let's say your initial capital is $1,000. If we calculate that, populate that in, this is the result you're getting, right? So you can see here at the bottom here, these are telling you all the different variations, all the different types of result you would be getting from trading the strategy the way that I've been showing you, right? The best case scenario is from 1,000 capital that you have initially. After 1,000 trades, you're going to be ending up at around 5,000. That's after 100 trades. And if we're talking about 5 trades per week, and we have 100 trades, that's going to probably be like in a year's time or 1.5 years, somewhere around there, if you're trading every single day, and if there is setup every single day. So anyway, after 100 trades, the best case scenario is from 1,000, it would be 5,000. Worst case scenario, you still be up around about $600 from 1,000 to 1,600, right? And if we look at the average, it would be at around 2.4K, right? That pretty much is telling you in a year's time you're doubling your account, which is insane, because if you double an account, it means you're making 100% return. And if you tell that to institutions or traders or other banks or institutions or banks, they're gonna call you crazy. But it's not crazy when you have proof like that, right? Does that make sense, everyone? So if we look at this right here, average result, This is going to show you starting balance or end balance. This is the average result, right? Maximum losers that you're going to get is 4. Maximum winners that you're going to get in a row is 4. In a row is 4 if you're losing trade, and the drawdown percentage is this much, right? So this is just to give you an idea of, if you're following the strategy, right, how are things going to perform in the long run, right? Because like I was showing you earlier, not all trades are going to be winning trades. Not all trades are going to be winning trades. It's going to be time where you take trades and it becomes a loser, right? So that's very, very important to understand. So now that you sort of see, wait, where is everyone? All right, so now seeing how all of this work is one thing, right? But let's be honest here. Applying it consistently without second guessing yourself, that's where the real challenge is. And that's exactly why, I've created the Pip to Profit program, right? It's really designed to help you not just understand the blueprint, but to master it step by step. It's a program that I've been building quietly for months, taking feedback from everywhere I've gotten, and then trying to put it together in a very short, sweet, concise course, right? What you're seeing here is just a scratch on the surface. Inside the program, I'll guide you through the full framework. We start from the foundation, right? Not just that, we start from the foundation, we're reading a price action structure properly, understanding where the power is, understanding how to look at pullback, the different types of entries, all the way to trade management, all the way to building consistency and how to have a proper roadmap going forward. That's the part where a lot of trading courses, they do not have. They teach you the education and then boom, just do it on your own. I want to make this a little bit different where I give you all the steps, provide you all the steps so you can just follow the instruction, because again, that's what I've needed when I first started, right? After this program, hopefully, and I have very, very high confidence that you will be able to recognize high probability setup just like that, right? Execute trades calmly, not panic and not, trying to force yourself into the market all the time, and avoid any kind of emotional traps when it comes to trading. So the program is launched. Today is the first day of the launch day. It's going to be in the comment section, or it's going to be in the description box underneath this video. So make sure to get the program, because right now we have the early bird sales happening right now, right? And the early bird sales is only going to be for a couple of days. We're not really going to open this up for too long, because this program is very, very valuable, and I want to make sure that we only invite people who are serious in trying to improve their trading. Okay, so make sure to copy it up right now, because again, it's not going to be at the early bird price for any longer than a couple of days. I know what you're thinking. I've tried learning before. Why would this be any different? Right? Is this just going to be any other course? The difference here is structure, right? I'm not just teaching you an education. I'm not just teaching you do A and B equals C. I'm teaching you the logic, and then use that logic, put it into a structural process where you can follow step by step, right? You're going to be here to build trading habits and stick to it for the long term using the proper technique step by step. And you have seen proof of that. I've shown you the last 5 trades. And what happens if we really extend that out to the last 1 month of trading, 1 year of trading, right? Feel free to test it out on your own. Okay? So this is going to be a blueprint, right? This profit program is going to be a blueprint. It's not just to understand the markets, right? It's to be able to trade like a professional. Hopefully that makes sense. Okay, so that is pretty much it, guys. Hopefully you guys enjoyed this webinar. Actually, let me share one more example, because this is the first example I wanted to share earlier on. Let me go to the charts one more time. All right, I want to share this trade right here that happened just earlier today. Right here. Okay, this is Aussie USD. And go to 60 minutes. Let's see, USD, 60 minutes, right around here. No, right here. Okay. Okay, 15 minutes. It's actually a 15-minute, 5-minute trade. Some of you guys were asking, if you could use this on different time frame. Yes, you can use this on any time frame, and you can use it on any type of market, right? I've shown you Bitcoin. You can trade this on indices, oil, commodity like gold, silver. That's all perfectly fine. Okay, because we're trading price action anyway, right? Price action is heavily affected by human psychology, right? So if there's human trading it, it's gonna move very similarly. So anyway, I'm looking at Aussie USD here. We have, again, strong trend, right? Higher highs, higher lows, breach towards the upper side, as price is pulling back here, it provides the clearest entry that you would see, right? So let me just bring you to this area right here. I'm gonna drop down to 5 minute. Okay, so on the 5-minute time frame, we see this downtrend happening, right? It's a move down, pull back down, right? On this last little push towards the downside, it almost looked like we're creating a small little channel like that, right? But anyway, we know that on this pullback, people were selling right there, and they were reacting off this huge level towards the left, this level right here. Okay, we have the higher time frame level telling us that there's power. We have a reaction off that level, and then we have sellers being trapped at this level right here. Once you have that on a pullback into that level, which is right around here, again, that's gonna be a very clear entry, clear-cut entry, stop loss below, and then again taking it up to the recent high. This right here will be a 1.87 hour trade, and it will look something like this. Boom, right to target. This happened just earlier this morning in the Asia session. Some of you guys who are in Asia, you guys probably would have been trading this or would have solved this. And yeah, this is something that I really want to sort of bring up in today's webinar because it happened just earlier today. Okay, hopefully that makes sense. And again, the Pip to Profit program is now released. If you guys like any part of how I've been talking about things on YouTube, if you guys like any of the content that I've been putting out, the way that I've been teaching, you guys are gonna love the Pip to Profit program, right? This is a program that I've been building with the team, with Naveen, to really find an easy way to show you what's the fastest and easiest way to start trading, get your feet wet, and build a strong foundation very quickly. Okay. For those of you guys who has registered, you guys should have received an email. All the details are in the emails. Otherwise, you can check out the link in the comment section. I'll see you in the program. All right. And yeah, cheers. That's about it. Thank you everyone for coming in. I appreciate the time. And make sure to like and subscribe. That's the least you can do for being in this webinar. I really hope that you guys can at least do that because trying to survive on YouTube is not easy, as it seems. So I appreciate your like on this video, and subscribe if you haven't subscribed already, and leave a comment on the video once the video is live. Right? Okay, cool guys. I'll see you in the course. The course is now live, and I see a lot of you guys actually have picked it up already. And I'll see you in the course. Cheers. Bye for now.